Hey everybody, Doug Katz here with another Mortgage Minute, and this week I'm continuing my discussion about divorce financing and divorce disposition of marital property. And I'm really actually going back to basics this week, and I'm going to talk about the three ways that you can disposition the marital home in the case of a divorce. And it's really pretty simple. You can sell the property, you can refinance the property where one spouse refinances the other off the property, or you can go down the road of a foreclosure or really just giving the property back to the bank. Now I'm actually going to start in reverse and talk about the third one, which is the least desirable. It's sort of a weapon of last resort if the property can't be sold and neither spouse can afford it and they just have to get out from under it. So it will have a credit impact, but it at least gives both spouses a new start. But I wouldn't do it without talking to a lender, without talking to a realtor to ensure that's the only options, without talking to whoever is servicing that loan, and without talking to maybe an accountant and a financial planner, because it will have ongoing ramifications. Now, the first one is selling the home, and that's pretty straightforward, right? That is where you're just going to take that home and put it on the market and sell it for whatever the market will bear at that time. Now, the important things to remember with respect to that are having decided with the divorce decree how much equity each spouse is going to get. It may be 50-50, it may not, but that should be determined upfront, so there should be no ambiguity. And you should always make sure that you're taking into account the cost of the transaction, because that does have a bearing on what the bottom line equity will be. Now, the second option, the refinance, is usually the most desirable in a lot of ways, but it's usually the most dicey. Now, whoever's taking on that home needs to be able to afford it. I've done some earlier mortgage minutes talking about income, and you really have to make sure that the person acquiring that home still has the ability to service that debt. But it's actually a very desirable way to go, because whoever the departing spouse is no longer has it on their balance sheet from a liability perspective, and they no longer have an ownership claim, so everything is free and clear, and both spouses can get a new start. However, it does take a deep dive. You should never, ever, ever move down the road of doing that on a divorce decree until you've spoken to a lender and you understand whether that spouse that's staying in the home can actually afford it in the short term and the long term, and whether it fits with their overall financial goals. As always, thank you very much. And if you know anybody buying or refinancing, or you're buying or refinancing yourself, or you're in the middle of a divorce or a separation and you need to understand what ramifications that divorce or separation has on your ability to buy or refinance a home, give me a call. I would love to help.